If there was a good crisis, it's this one, I think. And it just means that, yes, uncertainty has an opportunity, but also people think of it as a threat in first instance, and that's probably very natural and very logical, but it always immediately affects the resources that are available, allocated or available. And yeah, what does this mean for corporate venturing? And I would like to ask this question to Corina, who will see will we get into a freeze? Do we have to fight for the position of corporate venturing because it has a role and a responsibility, or do we take the flight forward? And Corina has some answers there based on your answers that you had in the survey.
Well, what you see, we had in fact, Francesca, thanks for clarifying, you could say, the surroundings of corporate venturing. It's really a lot of happening in the market and how people react to it. But we also ask people, what is the impact on your role and in your corporate venturing role in the organization? And we were a little bit afraid of it, because if you look at previous crises, then you saw that corporate venturing very often was put on hold or even was decreased during the crisis we had in the past. But we saw really three different groups in the organization. You have the companies who already have a long history in corporate venturing and also who had a crisis before, especially those companies with this long track record. And that you see on this picture, they realize that there's a lot of crisis, and indeed that there perhaps will be some decrease of resources, but they were very clear in their answers that they would continue as a company with corporate venturing, and that it was seen as still very important for the long-term future of their companies, which is good news. Even the ones who had a long track record, we also saw that some of them even started to become proactive. And already after finding out what is happening with the portfolio of internal and external venturings, they already have this view already and are looking now if they can be more proactive and see if there are certain opportunities internally but also externally where they could invest or at least reallocate some of the resources. You saw at the other end of the spectrum, there were still some companies who just decided that corporate venturing should be on their agenda within the companies. There they have a very difficult time. As one person pointed out, it's a failure to launch. And you see that the launches are on hold. There is, of course, no track record. Top management doesn't have any experience with it. And in these situations, everything is put on hold. All the investments internally and externally. What we were quite interested in was what is happening with those companies who only have a limited track record in corporate venturing, who has started over the last 3 to 5 years and which didn't have a real crisis yet. Because we saw in all the numbers that corporate venturing is really on the rise. It's really something which a lot of companies consider and are busy with. And what we were surprised is especially that these companies, even if their company was in a crisis because their core was really hit by COVID, that they say, no, we can still keep it on the agenda of our top management. We still can continue with corporate venturing, perhaps a little bit more to the core or some small adaptations, but our top management still thinks that corporate venturing is important and perhaps even more important because of the crisis we have. And it's the only way to secure the continuity of our company in the future. So if we were looking at, is it the impact of the core which determine if corporate venture will stay on the agenda, or is it more the maturity? The current signals we get, it's more the maturity, and if it's really embedded in the top of the management, of the board of a company, who will determine if corporate venture stays on the agenda. Another thing what we found quite interesting is when we wrote the book in 2015 of CVN, we found out that if we look at the sustainability of corporate venturing, it was also very important how many instruments you were using. We saw that companies who only used internal venturing or only were using external venturing, that was a kind of one-hand clapping. It didn't make a lot of noise, and after a couple of years, when the hype was over, it was stopped. What we have seen, and we have deliberately asked the companies, what kind of venturing instruments are you using? We were surprised that many, almost all the companies, were using multiple instruments. And I think that also contributes that we get this double hand clapping, because the internal and external are supporting each other, and we see companies who only have one flavor, they are more in a dangerous zone, because they don't have this combination, the synergies between these instruments. So that were some of the findings we found out. So it was not so much how the core was hit, but mainly the maturity of the organization. The other slide, and the next slide, is we went a little bit more in depth looking at the specific instruments of corporate venturing. So we looked at 4 instruments. One is the internal venturing, which often is not called internal venturing, but more new business creation or strategic R&D. Many names we have found out during the interviews. You have external venturing, where you have several flavors. We have looked at the one what we called corporate venturing capital, the most known when people think about corporate venturing, where you take as a company an equity stake in the company. But you see also what has increased over the last years, the corporate startup collaboration, where the corporate can be a launching partner, or can give information, or can give infrastructure. And then you have the fund-to-fund, which we won't elaborate more in the report, but not so much in these slides, which is that a corporate invests in a fund and which invests in the specific areas. Just the last one, we have not put it on the slide, but that has stayed as almost the same. So every company who has a fund-to-fund, they continue with it as it was before COVID. So if you see here on this slide is the internal venturing, right, which is very harmful because there's a lot of cost going on. But at least 40% of the companies say, now we continue with the activities. There is, of course, some remark where some of the people say, we don't know when the Q2 results or the Q3 results will be available, if this was still the case. So that's a kind of disclaimer. And when we saw just the results of the pool, then you are a little bit scared if that perhaps could harm the future. But it's seen for the long term, and therefore they continue with these investments. You see also the group, and there's especially the group who is just started with the long term, doesn't have, for example, external venturing, only have this internal venturing where, they are just launching, you could say, failure to launch. There you see they put everything on hold, and all these resources are directed to keep to the core. And it even was also with companies where the core was not harmed a lot, where they put it on hold. So it was not so much related on, again, how hard the core was infected by the COVID virus. Then you see a group where they say we do it selectively. And when we asked these companies, what do you mean with selectively? They indicated that it was very much a reallocation. Especially if you look at the stages of life of a venturing, you see what we call the alpha ventures. The ventures who just are there in the market, trying to get their proof points, their use cases, to have to validate their proposition. They are infected most. They are hit the most by the COVID crisis because their customers are busy with other things. There are no clinical tests possible almost at this moment. So then you saw that companies were, they can't put a lot of additional resources to it because you can't speed it up by that way, that they started to reallocate to those ventures who can continue, and also, especially what Fraresca was indicated, into the e-health, e-learning, energy transitions, and there you saw a reallocation within the companies, and the more experienced the company was in corporate venturing, the quicker they did the reallocation. If we look then to the external, and in the next slide, external venturing, you see that most companies were indicating that they started to get a good view how hard the hit was for their portfolio of startups they were working with or investing in. And a quarter of these ventures are in trouble, also financially. And we will later on, Fraresca later on will elaborate on the social responsibility and the role corporates will take. But corporates, especially if it is concerning their existing ventures, they are very carefully trying to help, not only in money, but also especially also in support. But that we will elaborate later on in this webinar. But they are quite serious looking at it. It's very hard as you're a startup now, and you don't have the investors, so you are looking for new money. That's a tough time. So that distinction you saw very much between how to take care of my existing portfolio. They take it seriously, but don't knock so much on the doors. If you never have knocked on those doors before, then they are closed. That's what we see with the external one.
Yeah, I can confirm from our experience. We are investor in a lot of small startups, and we see basically three financing problems. One is you just run out of money. You don't have any fat on the bone, no meat on the bone. I mean, these are not companies that have built up. Startups and scale-ups are not companies that have built up a certain amount of money to have a reserve for crises like these. The second one is, of course, finding fresh money is, of course, very difficult now. First, you cannot have a face-to-face meeting, which for a lot of investors is a problem at the moment because they want to see and want to feel, want to touch basically the entrepreneur they are going to invest in. One thing that is a bit where I think there's more responsibility of the financing and also corporate financing or corporate venturing capitalists and venture capitalists and companies like mine, a regional development company, is shifting milestones. This is really a problem also. You have the money, but the money is linked to certain milestones. You don't reach the milestone because your clinical trial is going south. The hospitals are closed for any clinical trials, and you don't get to the milestone, and then you basically have almost a theoretical lack of money. Of course, the lack of money is real, but the financiers are holding back because of milestones. So we definitely see this. We see it coming back maybe even threefold. No fresh money, no money of your own, and your milestones where you get money and you have committed money, you cannot reach the milestones and you lose out on three fronts. So I think what's happening in Europe, in France, in Germany, in Flanders, Belgium, in the Netherlands with these emergency credits for startups and scale-ups, at least part of it is let's say remediated for the short term. But I think there will be a role for corporate venturing and for financiers in general for the medium and long term. And of course, we would like to know, with this intermezzo, is how you would best describe the response of your company to COVID-19. And this is a poll, and I will be more patient than last time. You need some time to answer the questions. There are three answers possible. We have reduced the areas we invest in and only consider investments that are close to our core. We didn't change our investment strategy at all. Or we have even defined new investment areas. I will give you some time for it and hear when the poll is stable, and we can then compare it, Karina, with the results we've had until now in the survey. Yeah? Oh. Okay. I just heard that you need some time and I need to fill the gap. I will do my best. So we can already look at also the results of the survey and then get back to the poll. And I think if you look at and I will try to improvise now. If we get to the survey results and then get back to the poll, you see quite a clear distribution between flight, freeze, and fight. Smaller parts in flight and fight, and a big part in freeze. And it's even more than almost 3/4 that are in freeze. If we go back now to the poll, if that's possible, we basically see a stable picture. There's almost no difference at all. So I can go back to the other one, but this picture is probably confirming what we've seen until now, except that...
Still moving a little bit.
Yeah, I see more aggression within the corporate venturing community. More people are fighting. So let's wait another few seconds and see how this develops. Although it is clear that the majority still see we didn't change anything at all, or at least we didn't change our investment strategy. So that's still a majority. A minority in we have defined new investment areas, which is a bit lower than we've seen until now. And the relatively largest change you will see in, we have reduced the areas we invest in and only consider investments that are close to our core.
I think what's perhaps interesting here is that this could also be a reflection of the fact that companies are still trying to understand what's really going on and trying to make sense of the new situation.
As you saw also in the interviews, even when we had the first interviews, we had, you could say, the beginning of May, and the last ones we had at the end of May. Mm-hmm. And we saw already changes during the interview. First it was like, oh, after Q2, it's very clear what the situation will be. But when we look at the interviews we had, for example, at the end of May, it was like, probably we only will see it in Q3. So people really had the feeling that they needed more time. And because they needed more time, it was also, we have to go a little bit more to the core. Not so much because they want to block it, but just that they had the feeling as a company they needed some more time to make the right decision. And I think that's what we see reflecting in here also, that flight is not, I think, only that you reduce everything, but also that you need some time. And what we see also in the interviews, people were saying, there is a little bit less room for experimenting. Perhaps in the past we would invest in something we were not so sure yet of, or it is just around the corner. It's not very close to our core. Let's try something. And people already indicated, even also the companies who indicated in the questionnaire freeze, that they were a little bit cautious about doing too much of experiments in areas they were less secure about. And I think that's also something you should reflect in the results.
Yeah, can we, if that's possible, can we go back to the poll? Because basically what you see is the answer, we didn't change our investment strategy, of course, decreased to a certain extent because you've had 1 quarter more to think about your investment strategy. But then again, if you then look at what decision has been made, it mainly goes into we have reduced the areas we invest in and only consider investments that are close to our core, which basically looks a bit in line with the result we have seen with your poll, where you see that a larger part sees there are less available means available for us. Yeah. So these means are basically moving maybe to the core, but it is a reduction, and it is confirmed here. And I think if we would do this in the next quarter, at least one thing I hope to see is that there are some changes in the investment strategy, because waiting more than half a year in changing an investment strategy during this crisis seems not very logical. But it could mean that that would maybe even deteriorate the picture further. So interesting to see. I mean, by and large, the largest proportion still hasn't made a real decision yet on the investment strategy, so still too early to make a call. And again, important that you keep on doing the survey and see how this will evolve in time.
I'm not sure if I can follow up on that, if it's a matter of not having made the investment. One of the things that also was very clear during the interviews is the difference between companies or corporate venturing units that have a what you call ring-fenced fund. So they have set aside a certain amount of money to pursue their innovation objectives, compared to companies that are investing more off the balance sheet. And the latter ones are, of course, more affected by any budget changes, etc.
There are also some companies, if they look at their innovation budget, which are coupled to sales. So they keep the percentage the same, but because now their sales is a kind of drop, that also automatically, because the way they work, there is some less for innovation. There were only a few of that, but you see that some companies link them in these things. And it is more that it's not that they, if you go to also, I think the next slide after this one, is that we saw some specific elements. Still, a lot of people were saying corporate venturing for us is a long term. And it will be perhaps a hiccup, perhaps a hiccup which is much more longer than a normal hiccup you would expect, but we need to have it. And it was also that in the pictures Francesca showed, that 65% was indicating that their strategy was changing. We asked, okay, what is then changing in your strategy? And what they indicated was not so much that they would go to a complete new direction of their strategy, but it was more an acceleration or even on hold on certain areas, but especially in the e-health, in the energy transition. And a lot of people really hoped that certain large transitions which are needed in our society would be speed up by the fact that we really now have to do something, and that they're, especially on digitalization, that is really now, it was already in many strategies, but it has been very high on the agenda. But I think what corresponds with the results we had, people are saying for the meantime we stay with our investments a little bit closer to the core. So it's not that corporate venturing is less on the agenda, it's more that they say we are investing in those areas where we have a lot of knowledge, where we understand the market very well. And corporate venturing is often also sometimes used to go into areas which you don't know yet, where you want to like to experiment. And especially that part, that is more put on hold. So the more investing in your own sector, in the areas which you know, and for the long term, yes, they continue, but just go into an area you totally don't know, that is like, let's wait and see what is happening with COVID. So that's also the distinctions we saw in the interview. Also what we saw is people have become a kind of rationalization. In the past it was like, yeah, we do corporate venturing for a strategic reason and a financial reason. Sometimes they were investing in things which were strategic, reasonable, but perhaps the business case was somewhat mediocre. There is no room for mediocre anymore. So people, if they want to invest, they want to see a sound business case. So just say, yeah, but let's try, and it's strategic importance. There's no so much room for that type of discussions. So it's really focusing also on their current portfolio. They say we have to be a reliable investor, both to our own personnel as well towards the external venture. So this kind of experimenting, going in new areas, try something, that has been put on hold. And if you ask them, is there enough money in the market? People say, yes, there's absolutely enough money. And that will, so also venture who have a strong proposition, they can absolutely get money, but mediocre, no. And last remark I would like to make was also about the valuation. We asked questions about, do you think that the valuation will be much lower? The feeling and the hope even also of people was that they saw that in some areas, like virtual reality or certain artificial intelligence areas, they had the feeling that before COVID this was overhyped. It was a kind of balloon. So they really hoped that there was a little bit less air in those balloons and that we would go back to more normal valuations. And they also saw it helpfully to get a more realistic on the case, and not this kind of overhyped. What some companies really had the feeling of what happening is in some of the areas, especially in the more artificial intelligence areas. So that they hope that the market they had a sound correction, not because of COVID, but just because of it was overhyped.
I think that's a very good overview. I think it's important to mention that corporate venturing is indeed for the long term. And I think also maturity of corporate venturing within a company plays a role in there, isn't it?
Yeah, absolutely. It's seen, absolutely, it is not that they think about corporate venturing should have to do less. It's only if you look within the corporate venturing groups, which are really accepted, that unless for the ones who are just started, yeah, they have a closed door at this moment. But it's more in the corporate venturing strategy that they really focus on this long term of the core. So it's still very innovative, but this kind of diversifications in certain areas, we say, let's try. There is some less room for it, and it's really, you have internally and externally, you have to have a sound business case. Mediocre, no, that's no forgiveness for that anymore.
So no more only strategic or societal returns.
That's people say that these things,
Over.
if you come to it, is really what we say is to read from the calf. More a rationalization is happening within the corporate function itself.